Hello and welcome to this edition of Closing Trades with me, Aisha Faridi, Sharar D'Souza in the studios. And the 25k mark clearly for the Nifty remains elusive. Today as well, we were just 50 points shy of that and we still are. Let's see where we actually go from there. Actually, I stand corrected. 70 points, it's 50 points on the Nifty futures right now. Tug of war between the bulls and the bears, that continues. So while chemicals, power, textiles, these are spaces which are holding out. Technology is not, pharmaceuticals is not, and cap goods as well is a little weighing heavy on the markets, as is automobiles as we speak right now. So you've got a Sun Pharma, you've got iShares, Cipla, LTIM, Bharti, ITC and Reliance, which were the laggards on the index. And, similarly, you've got gains on a BPCL from the word go. That stock has been holding out well. Bajaj Finance is looking smart. There's Tata Motors, which is seeing an uptick of about 3%. Power Grid is holding out, as is NTPC. Within the broad end of the market, it's a lot better there because the breadth continues to favor in, tilt in favor of the advances. It's a 2:1 ratio that we've been maintaining. So Exide, Torrent Pharma, PNB today is seeing profit taking. But Naveen Fluorine, Colgate after those numbers, HPCL, Granules, RT Industries, these are all looking extremely lively in trade. But Cheryl, what about the newsmakers?
Absolutely. The way how you mentioned, you have Tata Motors, that particular stock is actually seeing a sharp up move for a fifth consecutive session actually. Aisha, remember that you had that upgrade coming in from Nomura and that's boding well for Tata Motors. And ever since that sort of an upgrade coming in for the counter, the stock has seen no stopping. Today is trading higher by about 3.5% or so. You also have Exide Industries that's seeing a downtick because the profits, or rather the numbers have missed estimates altogether. So 3% downtick coming in for Exide Industries. Take a look at Sapphire Foods because Sapphire Foods in focus came out with these numbers a short while ago. You had the KFC same-store sales growth see a sharp dip. Also, you had a dip coming in the Pizza Hut same-store sales growth, but the stock has recovered from the day's lowest point. 1.6% uptick coming in for Sapphire Foods as of now. Apart from that, some of the other candidates on back of earnings, you have Varun Beverages that's fallen because the Q2 profits have seen a downtake. You have First Source that is seeing a good uptick because the Q1 profits have seen a good uptick. So it's all about earnings altogether. Aisha, one of the other counter that I'll highlight is NTPC. You have Jefferies that's maintained a buy stance and also hiked the target. So most of the newsmakers today have to be about earnings because we are actually pretty much in the thick of the earnings season.
Oh yeah, absolutely. And the brokerage reactions is what the street is absorbing. But Kunal, what about the index? When do we see that 25k mark?
Well, I think the next couple of days we should be hitting the 25,000 levels for the index, and that would be maybe a formality for the index in terms of level. But I think it's a fantastic market breadth today because stocks which were on the larger cap front, they are the ones which are seeing a very strong follow through. And I see a lot of volumes participating in the mid caps and small caps when they are heading towards a breakout. So it's been like a regular pattern for many of the stocks where there is a flurry of price action for 3, 4, 5 days. These stocks, they see a much more higher volume action. Then for the next 3 or 5 days, we see these stocks retracing some of the gains and then going to a mild correction. But then the second round of a comeback is much more strong and powerful for many of these stocks. And I think that indicates that even the indices could probably follow a similar pattern. So after the last 3 days of strong price action, we're going through a couple of days of consolidation for the index. Hopefully, I think that should probably end in the next couple of days and we should be looking at a breakout. Now, on the short-term basis, the interesting bit is that the aggressive put writing which we've started to see on the Nifty as well as on the Bank Nifty. So even after that mild bit of volatility which has come back again to the indices, we are seeing 24,500 as well as 51,500 now as two important strikes where there is aggressive put writing. So if that holds on, then we could be looking at much more higher targets for the index for the very short term.
All right, so that's all about the index, but let's put the spotlight actually on the realty pack, especially the affordable housing pack, because the government could announce the guidelines for the new housing scheme as soon as within 2 months. This is what the sources have told ET now. Remember, the government has allocated about 2.2 lakh crore rupees for 5 years to push affordable housing in urban as well as in rural areas. Prakash is here with all the details. Prakash, over to you.
Yes, sir. It's a good news for the home buyers and the housing industry as their wait seems to be over. We are learning from our sources that the guidelines for the new housing scheme will be announced very soon. Sources are informing that the Housing Ministry is providing final shape to the scheme and the final guidelines will be released. the ministry will also approach the union cabinet very soon, and within the next 2 months, the final guidelines will be released. As you are aware that the government had already announced a new housing scheme meant for urban poor and middle class, and in the full-fledged budget, the government had made financial allocation of rupees 2.2 lakh crore that will be spent in next 5 years. And now there is a wider consensus on the guidelines, and it is expected that the housing ministry will approach the Union cabinet for its final approval very soon. Under this scheme, the home buyers are also going to get benefit of interest subvention, and that could be in a range of 3 to 6%. A very significant development coming in. Sources are also informing that the size of the houses would be bigger, and so is the loan amount as compared to the previous housing scheme. And the intention is to provide subsidized loan to the home buyers living in urban areas. So these are the important development on the new housing scheme, and that could be announced very soon.
We leave it at that, Prakash. In fact, some voices trickling in from the sidelines of the post-budget CII meeting. In fact, the President Sanjeev Puri says that the industry is in sync with the government's Viksit Bharat vision.
Absolutely in sync with that, and you have seen that the private capex is scaling up. It is happening, and our internal surveys in CII also very much indicate that the mood is very optimistic, and there are clear indications that given capacity utilizations, more investments will be forthcoming. So I think that industry will continue to invest and be a very proactive partner in the economic transformation.
We are fully committed. I'm in a business of two sides. One is the natural resources, oil and gas, zinc. Anything what we produce is in short supply. And we have so much of availability in India. I want more and more people to come. And now I have come, after hearing him, any aluminium or zinc or anything we start, we should have an industrial park around us. So more and more industry can come in, medium scale, small scale, that because we can supply them the raw material, we can supply them renewable power, and I have no doubt the consumption, the way double digit in India growing, and young population, it will happen.
On employment, PM wants a lot from you, from India Inc. on employment. He said corporate tax has been reduced. So what is on employment, and especially the one scheme of internship which has been announced in the budget?
Yeah, we give a lot of internship. I've given a tweet also that the people, the young generation, what they inspire, what they want to be, that position will definitely come to them. But एक बार जो काम में कोई छोटा बड़ा नहीं होता है, जो आपको काम मिले पैसा कमाना चालू कीजिए. जितने भी यंग जनरेशन हैं, लड़कियां हैं, लड़के हैं, कोई भी काम चालू करें. I can assure them कि उनको हर हालत में what they want to do in their life, it will happen.
First of all, Prime Minister directly talking to the industry, I think that's a great thing, and it creates a lot of engagement. And of course, we are looking forward to all the various schemes that have been announced in the budget, and then the large capex. And we are looking forward to very, you can say, faster and systematic execution of the same. So I think it's a good good thing to engage, and so we are very happy at Honorable Prime Minister speaking to the industry.
And so the investment will come. So we expect the investment will come, job will come. The schemes have been taken very, clearly by the industry.
Absolutely, like initiatives on the skilling, upskilling, and also all the incentive schemes to create employment, and I think they are all very, very positive strokes or positive push to the entire system. So therefore, I think this will lead us. This is one of the first steps towards the Viksit Bharat. So definitely, it's a very good thing.
As much as the PM's sort of, what I call formula for Viksit Bharat. And this formula is, in my mind, he wants to involve what I call the industry in a very big way. Because what are the issues? The issues are employment, skill development, rural economy, any all of them, I think industry has to become an equal sort of partner with the government in the Viksit Bharat. And I think this whole meeting was a call to that be part of the Viksit Bharat story. And for industry also, if we grow faster, if we grow bigger, obviously we have the biggest benefit. So I honestly believe all these industries who are here today, we should all be part of the government's new schemes. Example, they want us to get interns, let us get them. They want us to invest in the agriculture sector, especially in the rural areas, let us do so. They want to be part of food processing, what I call textiles, toys, employment generation industries, let us do so. They want to us to export, let us do so. They want to reduce our import, let us do so. So I believe our whole game plan should be now with the government in this whole Viksit Bharat agenda. Then we are also, if you ask me, I really like the fact that we are now pushing policies to make in India, making India the manufacturing hub. We should not look at India just as a market. We should look at India as somewhere where world companies can come and manufacture. Now that is happening. People are coming from abroad, making India an alternate manufacturing destination. That once again will create jobs. So these are all, if you ask me, I can easily see in this budget, there is a clear roadmap of how jobs can be formalized, how new jobs can be made. Honestly, I see. And as regards investment is concerned, there in COVID time there was some issue, but now I think in the private sector also wants to put more money. So I'm definitely seeing. I meet a lot of people. I'm seeing a lot of what I call younger generation of the family businesses coming in. They are all putting capex now. So manufacturing is coming in. New capex is coming in.
We're closing trades right here on ET Now. Let's now welcome on board Gautam Sinha Roy and chat about what he's making of the market right now as we count down to now 25K and the strength in the broader market continues. Gautam, hi, afternoon. Good to chat with you after a while. Help us understand what is it that you're making of the market while the FIs have come back. They've not come back with a vengeance. The DI supported every given dip continues for the markets.
Yeah, good afternoon. I think that's indeed the construct. But I think going forward, what we'll have to see is how the earnings construct plays out. Because this quarter so far, we are already seeing quite tepid earnings. And this is coming on the back of 3 years of very solid earnings growth. So earnings, I think, will be the key thing to watch out from a market perspective going forward. But the flow construct remains very strong, undoubtedly, especially the domestic.
And what is it that you've made of the earnings so far? A couple of surprises in there, positive ones, of course, largely inline set, but then some disappointing pockets as well. Some of the select private banks haven't really fired the way the market was anticipating them to.
Yeah, private banks, metals, even the OMCs and the other oil majors, if you see, large caps, we have seen very tepid earnings growth. And even for the broader universe, I think 130 odd companies have reported. And there also, we're not seeing much of earnings growth. And if you see, Aisha, last year, the earnings growth was also coming from margin expansion, which has limited room to expand going forward. So I think that is something that will be critically watched for going forward.
Gautam, the shallows are joining in the conversation. What are you making of the consumption space as a whole, given the fact that we have a lot of earnings now actually in place for the consumption space? And also, everyone was expecting the consumption space to do well in anticipation of what was expected in the budget.
Well, the broader consumption, if you see, there is a K-shaped recovery with high-end kind of consumption continuing to do well, be it real estate, cars. But there is some slowdown on that side. Rural consumption, we expect, should recover through the course of this year. And there, the budgetary support also, of course, comes into play. So that is one part we can be optimistic.
So in light of that then, Gautam, would you say that FMCG is more than a tactical call as we saw spring up after elections?
Well, difficult to say now, but yeah, there could be more legs there. The sector has not done very well for a very long period of time. So let's see, but something that we can monitor more closely going forward will be FMCG.
FMCG you monitor closely, but when you talk about consumption, actually, Gautam, you cannot even miss out on what exactly is the auto sector doing. It's not been a great 2 months coming in for the auto space. We will be expecting them to come out with their July sales number. The fact that in the next 2 days we'll be in brand new month. What's your expectation coming in for the auto sector as well as the auto ancillary space, which has actually fared well when you compare it to the primary auto space?
I think two-wheelers should continue to do well, both from margins as well as volume perspective. Even within auto anks, I think two-wheeler anks will do well, especially from a margin perspective. So this is one pocket within auto which will continue to do well, undoubtedly. The rest, I'm not so sure, honestly. CVs, we still have hope for further recovery there.
Interesting to say that, Gautam, because, the two-wheeler is going to have a lot of excitement. Now there is the Ola IPO as well in the offing. Bajaj has already diversified into a CNG bike now. How do you think the entry of a pure play EV maker within the two-wheeler listed entities now would mean, how it'll play out and what it would mean for the incumbents?
See, the company has been there for a while now. It's the highest selling EV. So from that perspective, nothing really changes. But of course, coming to the listed universe, the focus on EVs will increase all the more. And two-wheeler EVs is one area where we have seen some success. So that should continue, to my mind, over the coming 2-3 years. Four-wheeler EVs is where we still need to see some pickup, and we are waiting for some early signs of pickup to happen there. But two-wheeler EVs is a very steady growing business now as we speak.
Right. Gautam, let me talk about the space that has been actually the talk of town for the last 1.5 years or so, and that has to be the PSU pack as a whole. Any pocket of PSU, you catch that's the one that has seen sharp rally, be it power, defense, railways. What's your take now? Do you think that the pace of the rally will cool down now? People will take it a bit easy when you talk about the PSU space?
Well, one would hope so, honestly, after seeing the spectacular rally that has happened. Especially the earnings growth that has happened in these companies in the last 3-4 years has been spectacular. Some PE de-rating has also happened. Going forward, see, both these levers have played out. So one has to be mindful of the risk there more than the prospects going forward. I think could be rosy still from an earnings perspective. But PE de-rating room would be very, very limited in the PSU space broadly speaking.
Have you on the show and join in for that quick chat. Good speaking with you. Well, looking at the market, we are counting down to 25K, about 50 odd points away from that level, 94 points higher on the Nifty futures. Energy definitely is one pocket which is looking very good, but it's more lively when it comes to the broader market. Chemical, power, textiles, oil and gas, and even real estate holding out quite well. CA Rudramurthy as well joins in on the show for a chat on the charts. Rudra, hi, afternoon. What trends are you mapping right now? Any sectors which are propping up?
Yeah, good afternoon. See, for me, market is still a buy on every dip. In fact, we might see outperformance to continue in Nifty compared to that of Bank Nifty. And sector-specific and stock-specific moves will definitely be on the card. For me, specifically on sectors, chemical can do well, especially stocks like Navin Fluoro, or even if you want to pick Aarti Industry, they look very, very good. Insurance is another theme which can do very good. Stocks like SBI Life, HDFC Life can do good. And even from OMC basket, stocks like BPCL, HPCL, they can also do very well. So these are stock-specific and sector-specific themes. And this market is still a buy on every dip. And one has to be very sector and stock-specific to make money from here on.
So you need to be stock and sector-specific in order to make money from here on. Kunal, let me come to you. And before we move on to understand more what is exactly happening in the insurance space, let me take your closing pick actually, Kunal. What's your closing pick for our viewers today?
So it's the chemical stocks which have done pretty well. Like Aarti Industries is something which is looking attractive at current levels, and the stock heading towards a breakout about the 745, 750 mark. So that's a stock which I would look to recommend on closing trade.
Right. Rudra, what about your closing ideas?
See, for me, Manappuram looks very, very strong. Having taken support at around 203, 204 zone, I feel at current market price, the risk reward is very, very favorable. It is also available in futures. One can go long in Manappuram, looking at targets of around 235 to 250 on Manappuram with a stop loss of around 205.
Okay, that's interesting. And, Rudra was just highlighting the insurance pack as well, how that's looking lively. And here's an ET Now impact. We understand from our sources that New India Assurance is set to hike premiums by a good 10% on 9 of their health insurance products starting November 1st of this year. This move comes as a response to rising loss ratios and the new DAI regulations as well. In fact, other insurance as well, as we understand, are planning similar hikes. Anurag Shah, my colleague who broke this story just a short while back, joins in with more.
So going ahead, all of us are going to pay more for our health insurance premium because across the industry, companies are planning to increase the premium, and the market leader, New India Assurance, has all set to increase premium for their 9 products effective from 1st of November. So now New India has started to send the notices for renewals because from 1st of November their 9 products will have a hike of 10%. So 9 products are the Arogya Sanjeevani, which is a standard health insurance product, New India Premier Mediclaim, Jan Arogya Bima Policy, Janta Mediclaim Policy, Senior Citizen Mediclaim Policy, New India 60 Plus Mediclaim Policy, New India Top Up Mediclaim Policy, Universal Health Insurance Policy, and New India Asha Kiran Policy. These are the 9 policies in which New India is set to increase the premium by 10%. There are 3 other policies also, New India Mediclaim, New India Family Floater, and a Yuva Bharat policy. In these 3 policies, there is no hike happening. As per our sources, other insurance players are also set to increase premium going ahead from August, September. Main reason for increase in health insurance premium, one is the loss ratios in particular product, and another one is the new health regulations of IRDA, which got effective from April 2024. So in the new health regulation, the moratorium period has been reduced from 8 years to 5 years, and the waiting period also got reduced from 48 months to 36 months. So these things, and considering the medical inflation also, so all these things has made companies to increase the health insurance premiums. If we talk about the New India Assurance, then New India Assurance is the market leader in overall non-life insurance industry also, and in a health insurance also. So of a total health insurance premium, 18% is covered by the New India Assurance, and of New India Insurance only, of their total premium, 53% is through health segment only.
Right, and there you go, New India Assurance reacting to ET Now exclusive news break, now trading higher by about 2% or so. But on that note, we slip into a break on this edition of Closing Trades. When we come back, we'll talk about more stocks making news and what you should watch out for. Welcome back. You're watching Closing Trades right here on ET Now. And if you look at markets, after trying to actually reach that 25,000 marks, only 50 points away, we've actually dipped from those levels. We've actually come off the day's highest point. But let's find out what exactly is happening when we talk about copper, because it's been on a declining trend from its May highs. But what's causing the decline, and what are the probable causes for the fall, and what will be the impact of the decline coming in copper prices? My colleague Aishwarya is here to detail all of that for us. Aishwarya?
Well, copper prices have been declining from its all-time high mark, which it touched back in May. It stood at about $11,100 per ton kind of mark back in May. That has been now declining to over 20% and now stands at a 4-month low. As far as July is concerned, copper prices declined close to 7%, and on the LME bourses, the prices fell from about the 11,000 mark to about over $8,900 per ton kind of levels. As far as the CME bourses is concerned, there again we saw a slippage from $5.1 per pound kind of levels to $4 per pound kind of levels. Now, concerns surrounding copper demand and trading, of course, is due to increased inventory at the LME warehouses back in China. Weak conditions, of course, in the Chinese spot market is one of the other reasons. That, of course, overall reflects the lack of domestic demand in China and a surge in copper in terms of its exports as well. That was further, of course, worsened due to significant sell-off in the global tech stocks. The other reasons, of course, include demand concerns in China, weak GDP data for Q2, and a disappointment from the investors' side due to a lack of stimulus by the Chinese Communist Party meeting that happened very recently. So that is the update on why copper prices are declining at this point. Back to you.
Right, quite a bit of slide. Kunal, in fact, let's come to you on the charts as well. The fact that officially now Dr. Copper is in bear market, 20% off from the May highs, what is that indicating?
No, this definitely indicates some sort of weakness which could probably trickle across the globe. And I think it's a very sharp correction when I was looking at the charts for copper from I think 5.35 was the high approximately for copper on dollar terms. And that's now broken levels of even 4, or I think on the verge of breaking 4.06 is where the last trade is for copper in terms of dollar denominated prices. So it's on the verge of a very critical kind of a breakdown, and this could probably have some negative ramifications for the global market equity, because we've seen that copper has a very high correlation with respect to global equity, and we've seen many bull markets shaping up very well when copper moves up higher, and when this asset class gets into a 20% kind of a correction, it definitely has impact across the equity market. So I would probably believe that with some sort of time lag, say over the next 1 to 3 months, we could be looking at corrective phases from many of the global markets as well.
All right, watch out for then the trend that's in the making when you talk about the copper as well as the correlation that it has with global equity markets. A lot of earnings actually trickling in. Ajanta Pharma just come out with their numbers. A good set of numbers actually on the surface. If you look at it, the margins have seen a good uptake, be it the profit or the revenue, both have seen a good uptake. And the stock, there you go, sharp spike on an intraday basis, it's trading higher by about 4% right now. But my colleague spoke exclusively with the DPIIT secretary on the sidelines of the post-budget CII meet, which the Prime Minister spoke about Viksit Bharat. So let's listen in.
The PM basically tried to give a pep talk to industry that about their role in the journey towards Viksit Bharat, and of course he highlighted various aspects of how the government consistently since 2014 has tried to sort of tread that path in terms of higher capital expenditure, better quality of expenditure by the government to induce greater investment by the private sector. And then, of course, he highlighted elements from the budget like the employment-related programs, the MSME-linked credit enablement programs, etc., to focus again that this is a partnership that the industry must have with government in creating a momentum towards Viksit Bharat.
And what all that can be now made available or open to the industry, or make it more comfortable for the industry to come forward and invest more, employ more people?
I think, we have the ongoing PLI schemes. Now we have a fresh package, PM's package of 4 lakh crores for creating 4 crore employment, where again there is some trigger incentives available to industry in terms of first salaries or EPFO contributions, with the intention of ensuring that industry speeds up its hiring decisions, speeds up its investment decisions in line with the government's focused capital expenditure, which is the capex now is almost 3.5% of the GDP, which is much higher. It is almost double what it used to be before 2014. So in line with that, the government's expectation is that both the hirings and the investment by the private sector will also go up.
When you're talking about Viksit Bharat, I think this is something that's a must-do for India. As the Prime Minister said, when we celebrate 100 years of independence, we must celebrate it as a mature economy. And I think that's where everyone has to get together, and we should just come together saying failure is not an option. And today in this world of technology, where technology advances are so disruptive, you can completely disrupt and leapfrog. I honestly don't believe that it is impossible. I think it is very possible. But yes, we have to be at our creative best. We have to be at our innovative best.
When you talk about IT is also related to the electronic electronics manufacturing sector, which has seen superb growth in the past few years, especially mobile phone manufacturing and exports as far as those are concerned. I want to understand from you, what is your recommendation or your suggestion to further give a boost to that manufacturing muscle that India has currently?
We have to figure out how to grow the supply chain even further. I think that's critical. And there's no reason why we can't. But building complete end-to-end supply chain resilience in India is key for any sectoral growth.
All right, let's bring on board Sudeep Bandyopadhyay to talk more about the markets, what he's making of the trend that's in the making when you talk about sectors. A very good afternoon to you, Sudeep. And actually, let me start the conversation asking about the metal space. We just learned that the copper has been on a declining trend globally, and that is bound to have an impact when you talk about the Indian company, not only metal companies, but all of them that use copper as a raw material.
Absolutely right. I think, global metals to a great extent depend on what's happening in China. Unfortunately, there were a lot of expectations being built around the, Chinese Communist Party plenum. And there were expectation of significant stimulus announcement for kind of boosting the economy. Unfortunately, that hasn't happened. And obviously, the market is disappointed. The set of data which came out from China was also not very impressive. And the warehouse stock in different Chinese warehouses of multiple metals, including copper, is significant. Considering the above, I think global commodity prices are coming down, and that does reflect in two ways in India. One, of course, as you rightly said, some of the Indian manufacturers who use copper are rejoicing because copper prices are down. So naturally, they are in a better position. But on the other hand, I think strong metal prices indicate strong economy and strong global economy, which does help economies like India, which has significant export potential. So we'll have to wait and watch. But as things stand today, the commodity prices are under pressure, metal prices are under pressure, and we'll have to wait and watch what happens. Again, I will repeat, it will to a great extent depend on what happens in China.
It sure does. For now, though, tracking copper, which is now in a bear market officially, it's 20% off from its May's highs. But for us, Sudeep, back to tracking earnings, I guess. Since this earnings season has started, have you put fresh money to work or have you added positions into any of the existing names looking at the earnings?
Well, I think one thing which we have been positive about for some time, Aisha, has been the FMCG space. And we continue to believe that there is a nascent rural recovery, and that gets reflected in multiple pockets. Look at the Colgate numbers which came out. Incidentally, Colgate derives 40% of its sales from rural market, and a rural rejuvenation is helping Colgate definitely. The top line went up, of course, margin and other things also improved, but the fact is top line is going up is definitely positive news for rural focused FMCG companies, and we continue to remain positive on that, and that's one area where money can be added. The other area where we have been watching keenly is the BFSI space. The results have been a mixed bag. Some cases there have been significant improvement. In some cases there have been sharp deterioration in asset quality. As far as specifics are concerned, I think, let's say Bandhan Bank, I think it was a laggard. There were a lot of challenges on asset quality. That has turned around. Asset quality has improved significantly, and things are looking up there. And if you compare on a valuation basis, I think they are reasonably valued compared to their peers. So this is one stock where I think one can take a long-term position if they have 1 year plus time horizon.
Markets, because we've fallen significantly from the day's highest point, be it the benchmark indices or even Nifty Bank, 1% off from the day's highest point. For Nifty Bank, Nifty is down over 120 points as we speak. So yes, the markets are giving up all their morning gains, at least for now. Rudra, let me come to you and ask about the pharma sector. Short while ago, we had a mid-cap pharma company, Ajanta Pharma, report its numbers. Sharp spike is what that particular counter has seen. What's your take coming in the pharma space? Should it be the mid-caps versus the large-cap play right now?
Yeah, definitely. Yes. When you look at charts of Ajanta's Pharma specifically, yes, it is making that it has held that support at around 2200 zone, and it has just made a one-way move with higher top and higher bottom formation. And today, the close of this stock above levels of 2540 confirms that it has broken out that short-term resistance also, and this stock can further stay up and further continue towards levels of around 2750 and even eventually 3000 rupee can come very soon on Ajanta Pharma, and mid cap pharma can definitely outperform. Keeping in mind stocks like even Biocon for that matter, Granules, these are few stock which is looking very attractive both on chart and even fundamentally this is a sector which can do good. Most of these stocks are breaking out after a 10-year kind of a chart pattern where you are seeing this very long term breakout, and this can sustain for some more time. Yes, pharma will be a definitely a good sector to be in, and few stock names are Ajanta Pharma, Biocon as well as Granules.
Okay, that's the take coming in on some of the pharma names. Just looking at the market construct right now, by the way, the fall is getting quite steep. If we can just bring up the Nifty Bank as well as the Nifty as well, it's been quite a slide down, completely flattened out from where we started off, or rather the peak of the day. Similar is the case with the Nifty Bank as well. But Sudeep, how is it that you're maneuvering within the banking pack? I mean, it was an inline from HDFC Bank, Kotak was a disappointment, and then now you've got IndusInd as well to digest. And on the other hand, you know, some of the smaller ones like an RBL, Bandhan Bank, that's where the positive surprises are coming actually.
Yeah, absolutely right. I think positive surprise was there in PNB as well. I think, this time it's a mixed bag, I would say. Look at ICICI. I think the numbers were pretty good, but there are certain parameters where they were a little weak compared to, past few quarters. So it is a mixed bag. I think there are two things happening. One is, the efficient banks, the banks which were very efficient, their asset quality improvement cycle is over. And we will not probably see further asset quality improvement for these efficient frontline banks. Now, asset quality improvement is coming in banks which were laggard erstwhile. Let's say a PNB, there's an asset quality improvement. There's a Bandhan Bank, there's an asset quality improvement. On the other hand, there is a bad rush for deposits. Now, deposit mobilization, CASA, has become the holy grail for the BFSI industry, particularly the banks. And the loan growth will depend to a great extent on their ability to garner more and more cost-effective deposit. Because if the deposit is not cost-effective, the margin will be under pressure the more and more they do lending. Now, under the circumstances, the focus shifts back to some of the efficient banks which have a large deposit mobilization network. We'll keenly watch HDFC, we'll keenly watch ICICI, and some of the other larger banks with a strong network which is in a position to mobilize deposit in a much better fashion. Some of the PSU banks also will be watched because they also have large network, and we'll have to wait and watch how things pan out. I will be very keenly waiting for SBI results this Saturday, and we'll have to see what kind of improvements or what kind of deterioration we see in asset quality as well as the deposit mobilization efforts.
All right, so that's the take coming in on banks, and take a look at Fine Organics. Just a quick look because it's come out with its numbers. Sharp uptick, 10% uptick actually right now coming in for Fine Organics on back of its numbers. But let's understand what's the buzz in the dealing rooms today. We have Sharad here to tell us all about that. Sharad?
Well, yes, in focus is Aarti Industries, and what we are gathering from dealers and also channel checks is that company's important product, which is the benzene derivative based product, has actually picked up, especially in the domestic consumption part. Now, interestingly, the benzene comes from the discretionary segment of the company, and as per channel checks, this product itself, the domestic volume growth, that has picked up 20% on a month-on-month basis, and also on a value basis as well. Now, overall, the imports are also coming in at a near-time all-time lows for these benzene-based products, and this is because of a recent hike coming in for the clearing freight and forward charges coming in from China. And what the industry is stating is this has gone up between 20 to 30%, and that is why the domestic demand for this benzene products has picked up for Aarti Industries. Now, as per analysts also, Q1 numbers are expected to be strong, especially because of the higher volumes expected in the discretionary segment, and also on a year-on-year basis, an EBITDA jump is expected because of operational efficiencies.
Well, lots of earnings as well, and Tata Steel is also due to report its numbers tomorrow. Let me take it across to Ashesha, find out what the street is penciling in.
Well, yes, we are expecting muted set of numbers from Tata Steel this time around. Lower consolidated volumes are expected to impact numbers, but EBITDA per ton loss for European operations is expected to narrow on a sequential basis, and that will be a positive this time. As far as numbers are concerned, consolidated revenues are expected to largely remain steady on a sequential basis, but margins could contract to 10.8% versus 11.2% that the company had reported in the previous quarter. As I mentioned, consolidated volumes will be on the lower side on a sequential basis, and this will be mainly on account of India operations, especially after a seasonally strong Q4 that the company had reported. As far as India operations are concerned, EBITDA per ton is expected to decline by about 8% on a quarter-on-quarter basis. Steel prices were largely steady, and coking coal prices were on a declining trend, which will partially offset the impact of lower volumes in the quarter gone by. As far as European operations are concerned, spreads are expected to narrow, so the company had reported losses of about $39 per ton in the previous quarter, which will narrow to $30 per ton in the first quarter. Commentary on capex, on expansion plans, and especially commentary on European operations and UK transition will be crucial. But all in all, muted set of numbers expected from Tata Steel this time.
Hang in there, Shesha. Apart from Tata Steel, you also have Coal India that will be reporting their numbers. What should one expect?
Well, yes, we are expecting muted set from Coal India this time around. Lower volumes and lower e-auction premiums are expected to impact numbers on a sequential basis. Consolidated revenue for Coal India could come in at about 35,750 odd crores, which will be a decline of 4% sequentially. Margins, meanwhile, could come in at 27.5% versus 30.3% that the company had reported in the previous quarter. As I mentioned, lower volumes and lower e-auction premiums are expected to impact numbers. Lower e-auction premiums were at about 66% in the previous quarter, which are expected to decline to 60% in the first quarter of FY25. Meanwhile, share of e-auction volumes is expected to rise from 11% in the previous quarter to 13% in the current quarter. Management commentary with respect to guidance for the full year, guidance on e-auction prices, e-auction premiums and e-auction volumes will be crucial, but all in all, muted set of numbers expected. Lower volumes and lower e-auction premiums are expected to impact numbers.
Right, and that's not it. We've got Srishti as well waiting by to tell us what to anticipate from Maruti as well as M&M. Srishti?
Well, certainly. Firstly, let's have a look at Maruti Suzuki. This time we are expecting a decent set of numbers. The margins can also see an improvement, but that will be on a YY basis. 12% is what we are expecting. As well as if you look at the volumes, though there has been a jump of 5% on a YY basis, there has been a 11% decline on a quarter-on-quarter basis. So we can actually assume similar kind of an impact on the revenue if we compare it on a sequential as well as on a YY basis. The revenues is expected at 34,770 crores. EBITDA estimate is at around 4,160 crores, and indeed the margin is key to watch out for. 12% is what we are expecting. And lastly, on the bottom line, 3,467 crores is our expectation. But indeed, apart from the numbers, we'll be watching out for the management commentary on the demand and the volume outlook, because a couple of concerns that in the second half there could be some slowdown because on the passenger vehicle sales, how the inventory is lined up right now, and most importantly, after the tax waiver in the state of UP, how the sales of Maruti Suzuki for their hybrids have inched up. We'll be watching out for that. And quickly, let's have a look at M&M as well. This time we are expecting a good set because the mix is quite supportive. The auto volumes have inched up 14%, tractor volumes also up around 6%. And the revenue is expected to see a jump of 17% on a YY basis. The margins also expected to see an improvement, and close to 14% is what we are expecting. That will be on the back of operating leverage, as well as finally the tractors have seen a good momentum. Profit figure is expected at 6,445 crores. But on the management commentary, the 15th August launch of the new Thar is something. More commentaries on that, we'll be watching out for that. So all excitement for these two auto majors. Back to you.
Absolutely, going to be a very busy day tomorrow, Shrishti, indeed, given the fact that you will be busy with the auto numbers as well as Tata Steel as well as Coal India. So a lot of numbers to watch out for tomorrow. But for now, taking a look at the markets, definitely looks like we are ending near the day's lowest point. And Kunal, so what are your BTST ideas for our viewers?
So there'll be a couple of buy calls. The first one is around Chambal Fertilizer. That's a chart which is looking attractive. In fact, many of the fertilizer names have started to pick up pace for themselves. So Chambal Fertilizer is what I would pick at current levels, targets of 535, stop loss to be kept at 505. And Adani Ports is the other stock which is heading towards a momentum breakout above 1550 plus mark. So would suggest a buy above 1550 levels, targets of 1625, stop loss at 1500.
Rudra, what about you? What are your BTST ideas?
So I too also have a 2 buy call. One is on Coal India. Stock has given a breakout above levels of 502 and it is sustaining for last 2 days. So expecting Coal India to touch 530 with a stop loss of 514 and a buy call on Adani Enterprises. One can look at targets of 3,200 to come with a stop loss of 3,130.
Okay, India Mart numbers as well up for you on your screens, and operationally they look quite okay. It's an uptick of 37% that they've seen on the PAT alone, 93 crores on the EBITDA, and you can see that spike up coming on the entire space. But Sudeep, other than the pockets that we've already spoken about, anything that's on your watch list?
I think the infrastructure, construction, and related sector continues to get significant attention of the government and multiple other authorities. Private sector is also hopefully getting into the capex mode, and under the circumstances, these are the sectors which will continue to attract a lot of fresh orders and opportunities. Some of the companies in this space are still reasonably valued, I would say relatively, and somebody in this investment for long term should reap benefits. I will talk about a specific company, Patel Engineering. I think they are predominantly into hydro tunneling and irrigation related water projects. And this is one space which has a significant focus of the government and multiple other authorities. Under the circumstances, their order book is significantly moving up and execution is improving. So I think some of these spaces where the valuation still remains reasonable can be definitely looked at. Some of the larger construction infrastructure capex plays like Larsen, in spite of the run-up, continues to remain attractive from a long-term perspective.
Okay, Sudeep, Rudra, Kunal, thank all of you for taking the time out and joining us today. Just minutes before close, so let me take it across to Snehi and find out how the closing trades are shaping up.
Well, yes, so very volatile trading day coming in today. If you take a look at Nifty, where it is at right now, 24,839, 840 levels coming in on the Nifty. We once again went very close to those 25,000 levels, but yet again haven't touched those levels on the Nifty. Moving on, let's take a look at what Sensex has done. Nifty looking rather flat. Sensex also in tandem with the Nifty. Very, very flat moves coming in. Nifty Bank also in tandem with both of those broad mark peer indices you have. Nifty Bank also very, very flat moves coming in. Not much happening on that front. Sectorally, let's take a look at the big winners and losers today. Energy, auto, media, realty, metal, all of these sectors have managed to close the day in the green. On the flip side, however, you have Nifty FMCG, Pharma, IT and PSU banks. PSU banks rather dabbling between the green and the red, but well, yes, all of those other sectors are in the red, and Nifty FMCG is your top loser of the day. Let's take a look at what has weighed on that FMCG index today. You have a lot of stocks that have weighed on FMCG, and Pharma also, well, really low. Dabur, ITC, Britannia, HUL, United Spirits, all of them weighing on FMCG. Let's quickly take a look at all the important earnings candidates also that we did see coming today. Let's pull up an X side. Let's take a look at what Sterlite is doing. We also have Granules, Green Panel, a whole host of numbers coming today. And you have Force Motors, Arvind Smart Spaces, a lot of numbers, Ajanta Pharma as well coming in with its Q1 numbers today. But other than that, let's talk about the big news of the day. And let's talk about the block deal that we did see coming in the morning. PNB Housing, it would quickly pull up that stock and take a look at what PNB Housing is also doing as of now. Well, under pressure is where PNB Housing is, 2% lower coming in on that front as well. Let's also pull up India Mart and see what the stock reaction is, because we did have numbers coming just a few minutes ago, and there you have it. India Mart 5% higher. Good set of numbers coming in. Also, let's quickly revisit what Granules did in today's trade. because very stellar set of numbers coming in. Management commentary also looked rather positive. There you have it, 4% higher coming in on granules as well. But well, yes, when you take a look at Nifty, ended very flat, just held on to the greens by the skin of its teeth. At 24,837.9 is where Nifty has shut shop for the day. That's how the trading session looked like. Thank you so much for tuning in.